The company announced this in a blog post, doesn't say anything about the reason why. What do we know about the motivation here?
Well, we know very little. So the company said next to nothing about its rationale, to your point. We do know that this is a decision that caught employees off guard. It caught investors off guard. Analysts were not expecting this whatsoever. With all due respect to Colin, I think the comment of the day on this morning was that this sort of looked like amateur hour on Tesla's part. This was a decision that sort of blindsided everybody, and I think there's a combination of factors that maybe led to this reconsidering. It was going to be difficult for the company to get out of leases for where it has stores. There were all sorts of concerns on the part of customers about not being able to actually, see and touch and feel the cars. And after, all of the ways in which this industry is changing, that still matters to a lot of people.
That comment, Craig, coming from Evercore, which said this is amateur hour, Tesla needs a stronger layer of middle management. Colin, are you happy with this decision?
Honestly, this isn't different than what we were told offline after they made the decision that they were going to go through an evaluation process in all these stores and shut down a certain number of them. So we don't really know what the process was for making this decision, the announcement last week and the week before, and then what got announced this week. And so there's some question around that. But it does point to the concern around management and depth of management and the thoroughness of the decision-making process. And that is always a concern when you see an organization like this that's had such significant turnover at the senior levels over the last couple of years.
Now, Craig, RBC suggested that perhaps Tesla's doing this because it didn't get a positive reaction on orders. Remember, this was on the very same day that Musk announced the $35,000 Model 3. Could it be possible that the online orders that followed just didn't measure up with his expectations?
Yeah, I think that also could have been a real factor here. I'm not sure to what extent Tesla's communicating that. It sounds like they're being cagey with Colin and the rest of the analyst community about what played into this. But it certainly stands to reason that just sort of reading the tea leaves, you're seeing reports as we wrote up last week from Inside EVs, which is a website that does monthly estimating of how many cars Tesla is selling in the U.S. month by month. And they see a real slowdown in the Model 3 and even the Model S sales as well in the first couple months of this year. Some of that's going to be seasonal, where the first couple months of the year are sort of weak for the whole industry. And Tesla also did say that they were going to really focus on deliveries to Europe and China this quarter. So it's not a total surprise, but you have seen some of the analysts raise concerns about weaker sales, and that may be playing into Musk's guidance a couple weeks ago that he doesn't expect to earn a profit this quarter.
Colin, are you concerned about weaker sales?
The heart of this story at the end of the day for us is about depth of demand and margin on those cars. So at what price are they able to sell the volumes that they need to really see significant operating leverage? And so there's a couple of things that we like to highlight. First, Model S and Model X significantly outsold anyone's expectations, especially in the high end. And so we think there's potentially substantially more demand than a lot of folks are looking for in this Model 3 class. As we look against some of the competition, average price kind of $46,000, $47,000 for competitors. And sales numbers for Audi A4, Mercedes C-Class, BMW 3 in the 400 to 500,000 unit range. They would have to take significant share here. We think that's definitely a possibility, and the depth of overall demand is sufficient to support them. But they would be competing very aggressively with the other car makers in this space. So we think they can get to those numbers. And the real question is, how much money are they going to make on those sales? So getting to 350,000, 400,000. Model 3s, we think they need to be in the 20% range on a gross margin basis to really support the earnings leverage here. And we're in the camp of saying that we think that happens, and we start to see the evidence of that as the seasonality comes off here at the end of March into April, and we start to see what the 2Q guide is going to look like.
Meantime, Craig, quickly, we're getting new information about what Tesla employees knew when regarding Elon Musk's take private tweet, including one former employee who's apparently spilled the beans to the SEC, saying employees knew about this internally and questioned whether the plan was legitimate. Give us in a nutshell what happened here.
Yeah, this is a former security manager who's being represented by a New York attorney who's actually represented a few folks who've tried to, who have submitted submitted whistleblower complaints to the SEC, and this ex-manager says that there was knowledge of this idea that Tesla maybe was going to go private, and sort of doubts that that was going to be possible before Elon Musk sent his now infamous funding secured tweet and other posts on August 7th. Tesla, importantly, is pushing back on this. They're saying that this guy was fired after about a year with the company, and that this is untrue. And so this is a report that you have to sort of take with a grain of salt here, just given Tesla's pushback and the way in which this attorney has definitely been aggressive about trying to generate publicity about his attempted whistleblowers.